the closing bell, and we got RIM, R-I-M-M, at 29.48 right here where my pointer is. The volume today is 23 million shares going into its after-hours earnings report. We will update you as to how this will work as we get into that knee-jerk reaction. Look, stock is sold down a lot. There is still a little downside risk in it. But then on any good news that they can compete with Apple and the other various Android apps and the other apps that they compete with out there, they have a new operating system that they're going to launch. Maybe it's a blockbuster like it was 10 years ago when they introduced the BlackBerry. They were very creative people at the time. We do give them credit for that. But right now, they're going to have to deal with competition. And they're going to have to deal with the earnings yield. Outside of all of the good positive things about RIM, the technology and the competition has changed over the last 10-year period. And here we are. And whether RIM was trading at $170 doing this or at $60, it's always the same trade management. The only thing that changes is the common denominator. The numbers change. The trade, the volatility part, that all stays the same. It's just at a lower price. RIM preview will be back after the close. Closing bell is in 1 minute. Here we are waiting on RIM. And this is a 3-minute after-hours tick chart here. There's the bid. There's the ask. A lot of short sellers are in this name and have been for quite a while because of the business model problem. However, if there's any kind of resolution to it, there's a lot of shorts in it, and upside volatility could come into this play. We'll know here when they do that knee-jerk reaction one way or the other. We've got shorts out at 34.90. We got buys out at 23, whatever, 60, 70, or whatever. But if we drop down very quickly and the news isn't bad, we're going to pop that thing along, like right now. Okay, MMTs, I read you the report, but I didn't get it on the live video. So I'm going to tell everybody once again. Let's take a look at the 25.5. I already read the report. Okay, the guidance, 37.8 versus 39, bad number. Preliminary comes in at 80 cents versus 89 cents, not a good number. Revs 4.2 versus 4.48. Here we are at 26.42, down $3 in after hours. We got orders out at 23.50. Those orders were given out before the market. They whipped that knee jerk right to 31, shell and short, straight down, bid and ask, 26.25. We'll come back and update you. Once again, FY12 EPS at the low end of previous $5.25 to the $6 range versus the 506 Capital IQ consensus estimates. But remember, the preliminary is 9 pennies short on the knee-jerk reaction. Not only that, if you ask me, the guidance is disappointing again. The competition remains heavy. But we're buyers at 23.50 now. And we haven't broke below 25.50 yet. So, the thing about it is, it's about the guidance. It's about the preliminary number. Now it's going to be the public perception about RIM.